Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market, and I want to do a video today. There's big news. No news, Fed. The Federal Reserve said it will hold interest rates, but it's going to raise rates once this year, and then it's going to cut rates twice next year, which to me is just ludicrous, if you ask me. If you look at it, why don't they just cut rates once and just say we're going to hold it from here and not do anything? Well, that would actually provide stability in the markets and allow the markets to go in the direction it should actually go. So that's probably why they're not doing that. So it was just ridiculous on many terms. And so, yeah, I personally think the Fed will have to reverse course, and I just wanted to get into some data that actually gets into it. And so first thing I want to get into is in terms of this week's economic news. If you look at videos earlier, I talked about how there's going to be a housing crash again. And if you look at it, I think a housing market, the housing starts were at all-time lows. Or not all-time lows. They were at multi-year lows. They declined by 11% on a month-over-month basis. And this is the moving season. This is the season where, housing starts should be really robust, if you ask me. So that's generally not a good sign for the housing market. And if you look at the S&P Case-Shiller Home Price Index, which is the 20 largest metro areas, on a year-over-year basis, it's actually declined. So, and the other thing too is Airbnb is now, I was looking at their insider buying and selling, has a lot of insider selling. That's one bubble that I talked about, and it looks like the Airbnb major shareholders, and the only buyer in it was a new investor. And it was one of those things, like if you're going to be new board member, then you have to buy and own Airbnb stock. They would want someone with skin in the game. You can't just be on the board and not own any of the company. So the insider buying was just a token buy, someone on the board. So if you look at it, that is a problem. And I don't expect to see that manifest itself till well into next year at minimum, though. And the other thing too is I was looking at a couple of things. I wanted to get into these bankruptcies. I saw a chart the other day, and it was 2022, ever since the Fed started raising rates. And if you look at it, normally it would go all the way up to 08, hit a peak, and then it would slowly start going down, trickling down. And it was a really long downward slope. But then in 2022, you can tell there was sort of like, I want to say not a hockey stick, but a curl upwards. And it started curling up. And I guess it's like one of those scoop things when you scoop something onto the ground. I forget what the toy was called when I was a kid. You would use to scoop the ball. But it looked like a scoop coming up. And it was bankruptcies, and it was consumer loans. The other one was credit card debt and auto loans, which I talked about auto loans years ago when I had my old channel. And there was an auto loan bubble. Now, I think the cookies 1.9 sickness and the dropping rates to zero really enabled that bubble to go much further and longer. But it looks like that bubble, which was spotted by a lot of people in 2014, is probably starting to pop a little on auto loans, because those bankruptcies and that's going to hurt retail sales in the long run, because people are no longer, when you have a lot of bankruptcies, you can't buy, you're ineligible to borrow credit, especially when you declare bankruptcy. And I also saw corporate bankruptcies are at their highest since I think 2011, which is not a good sign. And I think this will be reflected in the data. But one of the other things, and this is why one reason I opened up the channel and fundamental analysis. As you can tell, I say understanding the government economic data is important for investing. It's not everything. And I talk about sentiment, there is technical patterns, and there is stuff that's fudged in manufacturing. But I also looked at, and Joe Biden was talking about, they asked him about lowering gas prices because a lot of people are saying oil is going to be a lot of people love oil now. They think it's huge. When I start seeing Yahoo Finance articles about high gas prices and whatnot, I think this is it. This is the time to, step back or at least wait for it to correct. And one of the things that got me too is this just is something that reminded me. In 2012, Goldman Sachs said at the end, like, gold's not going to do all that well. And a lot of people laughed at them. And especially a lot of gold bugs, they're like, oh, this is a contrarian. They're probably just trying to buy. Well, Citibank says oil at these prices are unsustainable. And I think they're trying to do this to gain some credibility. So I personally think a pullback. Now, I personally think we're going to see 160 and 170 oil within the next 10 years. But I think this probably, based on sentiment and everywhere on Yahoo Finance and everyone talking about higher oil prices, I think oil is a short-term top for now. And here's the other thing. They talked about what will cause prices to go down. Well, they said everything's on the table. In fact, we still have X amount of oil in the strategic petroleum reserves. We can dump them. So I won't be surprised if we saw another strategic petroleum reserve dump. And I remember hearing something that they said they can even dump all the oil on the market to zero. I don't know who said it. So everyone's like, what would cause it? Cost of production's high. Companies can't produce more. Oil from Saudi Arabia and everything. Their OPEC nations are cutting productions, and they don't have the skills to increase the production. And there's always a way in this market. And I think what they might do is they might just dump even more. I looked at the strategic petroleum reserves. There's still plenty there, meaning enough to move the markets down. And they will empty it because they're crazy enough to do so. And this is what I mean, accumulating all the markets. During if you follow this channel, I predicted we would be in recession next year, last year. But the reality is they won't change the definition. It's no longer two negative GDP numbers. So I was right, but then they changed the rules because they didn't want to acknowledge we're in recession. And one of the ways they got the economic data to be positive was they emptied out the strategic petroleum reserves, and they count them as exports, and they count that as economic activity. And I think that's what they're going to try next year, or something along those lines, to increase economic activity so this can be a quote-unquote soft landing. And so look for that. I think eventually all these bankruptcies are going to catch up to them, and it won't work, especially with these high interest rates. But I think they're going to try to do that so the Fed can only cut rates twice, and that's about it. So I think there's some coordinated effort going on. And so be on the lookout for that. But who knows? Tax revenues are declining precipitously now. And I don't think that's because of job losses. I think 2022 was the worst year for investors. Bonds got creamed, and the stock market didn't do well. I think that the capital gains and the capital losses are the reason. And I think we could see that again. But anyway, I still think because of interest rates, bankruptcies, and this stock market has topped. And if they dump more and more oil, I don't think that will be good, because what happens tax revenues could also decline rapidly. And why? Because there's royalties on oil and gas production, and there's also royalties when you pay for the pump. So I don't think that will solve anything. And I think it will be like the last time. Oil went all the way down to 65, but it recovered quickly. So I don't think it will have the large effect that it will have in the future. And I think with all these bankruptcies, I think there's going to be more, and I don't think the stock market has much more to run. Now, Avi thinks it could go to 4,800 and then back to 5,100. I don't think it will be much more. And a lot of people think that the Fed will reverse course and do QE. I don't think it will be that much anything. In terms of gold, gold did pretty well, and I think it will continue to do well. But how much, I don't think it will really break out till next year or the year after. So anyway, those are my thoughts on the markets. A lot of things to digest. And if you like that video, hit that like button. Subscribe if you already haven't. I hope to see you next video.